The Indian corporate landscape was recently shaken by a high-profile clash between the Adani Group, a conglomerate with interests spanning ports to power, and Hindenburg Research, a US-based short seller. Hindenburg released a scathing report accusing the Adani Group of stock manipulation, accounting fraud, and other financial irregularities. This report sent shockwaves through the Indian stock market and ignited a firestorm of controversy, drawing global attention to corporate governance practices in India. The allegations, if proven true, could have serious implications for the Adani Group, one of India's largest and most influential conglomerates. The controversy has also raised concerns about the role of short sellers in the market and the adequacy of regulatory oversight. As the saga unfolds, it has become a test case for corporate accountability and the resilience of India's financial system. Hindenburg Research, known for its aggressive short-selling tactics, released a bombshell report in January 2023. This report sent shockwaves through the financial world, capturing the attention of investors, analysts, and regulators alike. The report accused the Adani Group, one of India's largest conglomerates, of engaging in a brazen stock manipulation scheme spanning decades. This scheme, according to Hindenburg, was designed to artificially inflate the company's stock prices, misleading investors and the market. It alleged that the group had used a complex web of offshore entities to inflate its stock prices and conceal losses. These offshore entities, often located in tax havens, were purportedly used to create a facade of financial health and stability. The report also raised concerns about the group's high debt levels and its close ties to the Indian government. Critics argue that these connections may have provided the Adani Group with undue advantages, allowing it to secure favorable contracts and regulatory leniency. Hindenburg's allegations were meticulously documented in a lengthy report that included financial statements, internal company documents, and interviews with former employees. The depth and detail of the report aimed to provide irrefutable evidence of the alleged malfeasance. The report claimed that the Adani Group had used these offshore entities to engage in round-tripping, a practice where money is funneled back to the parent company through shell companies to inflate revenues and profits. This deceptive practice can create an illusion of robust financial performance, misleading investors and stakeholders. The report also alleged that the group had used these entities to hide the true extent of its debt from investors and regulators. By obscuring the actual financial health of the company, the Adani Group could continue to attract investment and maintain its market position, despite underlying financial vulnerabilities. The Adani Group vehemently denied Hindenburg's allegations, calling them baseless and malicious. The group issued a detailed rebuttal, refuting each of Hindenburg's claims point by point. Adani Group characterized the report as a calculated attack aimed at damaging its reputation and undermining its businesses. It accused Hindenburg of having a vested interest in driving down the group's stock price to profit from its short positions. The group asserted that its financial statements were fully compliant with all applicable laws and regulations. It defended its relationship with the Indian government, arguing that its businesses were aligned with the country's economic development goals. The Adani Group also highlighted its strong track record of growth and profitability, emphasizing its contributions to India's infrastructure development and job creation. Adding another layer of complexity to the already convoluted controversy, Hindenburg Research has now dragged Madhabi Puri Buch, the chairperson of the Securities and Exchange Board of India, SEBI, into the fray. This move has added fuel to the fire, intensifying the scrutiny and public interest surrounding the case. The short seller alleged that Buch had a significant conflict of interest in the case due to her husband's past investments in an Adani Group company. This revelation has raised eyebrows and led to a flurry of questions about the integrity of the regulatory process. This accusation has not only raised questions about the impartiality of India's market regulator, but has also cast a long shadow over SEBI's ongoing investigation into the allegations against Adani. The public and investors alike are now questioning whether the investigation can be conducted fairly and without bias. Hindenburg's detailed report claimed that Buch's husband Buch had invested in an Adani Group company through a fund he managed. This connection, according to Hindenburg, is too close for comfort and could potentially influence the outcome of the investigation. The report further alleged that this investment created a direct conflict of interest for Buch, as she was now responsible for overseeing the investigation into the very company her husband had financial ties with. This situation has put Buch in a precarious position, raising ethical and professional concerns. Hindenburg argued that this apparent conflict of interest severely undermined SEBI's credibility. They called for an independent investigation into the matter to ensure transparency and restore public trust. The call for an independent probe has gained traction, with many stakeholders demanding a thorough and unbiased review of the situation. Section 5. The Buch defense, standing ground against Hindenburg's onslaught. Madhabi Puri Buch vehemently denied Hindenburg's allegations, calling them a character assassination attempt. She asserted that her husband's investment in the Adani Group company was made years before she assumed the role of SEBI chairperson, and that she had no involvement in the investment decision. Buch emphasized that she had always maintained the highest standards of ethical conduct throughout her career, and that she would not compromise her integrity for any reason. Buch defended SEBI's handling of the Adani case, stating that the regulator was conducting a thorough and impartial investigation into the allegations. She emphasized that SEBI was committed to ensuring fair and transparent markets and that it would not hesitate to take action against any entity found to be in violation of securities laws. Buch's strong defense helped to restore some confidence in SEBI's ability to handle the situation, but concerns about potential conflicts of interest lingered. Despite the intense scrutiny, Buch remained resolute, addressing the media with unwavering confidence. She highlighted SEBI's long history of upholding market integrity and protecting investor interests. Her statements were aimed at reassuring both domestic and international investors, emphasizing that the regulatory body was more than capable of managing the crisis. Buch's leadership during this tumultuous period was seen as a testament to her commitment to transparency and accountability. While some critics remained skeptical, many industry experts praised her forthright approach. Her unwavering stance served as a beacon of stability in an otherwise volatile situation. As the investigation continued, the financial markets began to show signs of recovery, reflecting a renewed sense of trust in SEBI's regulatory framework. Buch's efforts to stand her ground against Hindenburg's onslaught were not just about defending her own reputation, but also about reinforcing the credibility of India's financial regulatory system. Her resilience and dedication to ethical governance left a lasting impact on the financial community. So, let's delve deeper into Hindenburg's allegations. Essentially, they assert that the company has been involved in fraudulent practices, including misleading investors and falsifying financial records. These are serious accusations that could have significant implications for the company's future. The fallout from these claims has been widespread. Investors are understandably concerned, and the stock market has reacted with noticeable volatility. Regulatory bodies are also beginning to take a closer look, which could lead to further investigations and possibly sanctions. This isn't just a local issue, it's a global reckoning. Companies around the world are now under increased scrutiny, investors are more cautious, and there's a growing demand for transparency and accountability in corporate governance. It's a wake-up call for the entire industry. As this saga continues to unfold, the implications are becoming clearer. For one, there could be lasting damage to the company's reputation. Additionally, this may set a precedent for how similar cases are handled in the future. It's a developing story that we'll be watching closely,